Hey everybody, Lawrence from financialthing.com here, as always, Thursday night. If you're in the UK, Thursday evening, 7:30 p.m. live stream. Welcome. Thanks to everybody for joining me today. We have a ton to get through, ton of information. We're going to be talking about peer-to-peer lending tonight. We're going to be talking about the fees involved in investing in the stock market and why I'm so adamant, about index trackers and using platforms like Vanguard and Fidelity to really cut your fees down. Because there was a news story about that this week I found particularly interesting. And we're going to talk some cryptocurrency. Not this week, but next week we're going to be talking about staking, which I think is a really interesting prospect. That's where you can take your cryptocurrency and stake it on the system that pays you an interest rate, kind of like you would get an interest rate from a bank account, but of course very much different because it's not protected by anything. But it is staked against your cryptocurrency ownership, which I find interesting. It's a way to get yield in a very low interest rate scenario that we're living in right now. It's something definitely to look into. And we'll talk a little bit about the house crowd. We're going to talk about Blend, their FCA authorization announcement, which is a really piece of good news, and some other things. So yeah, thank you for joining me. We'll try to keep it under an hour. As always, usually doesn't happen, but it's always the goal. And if you have questions or comments, put them in the stream. If you're watching this in the future and you weren't on the live stream, then I hope you enjoy this information. I hope it brings value to you. Please hit that subscribe button if you can. There's that big red button. Hit that bell so you can be notified when new videos are released or whenever I go live. Also, possibly going to do an impromptu live stream with Cufflink CEO Narinda. Maybe tomorrow. Not 100% certain yet. It's not confirmed, but I thought I would get him on if we can have a quick chat with him about what's going on with the auditor's resignation letters from Ernst & Young that was published. Story, of course, in the Times. We're going to talk about that, what my personal feelings are. And yeah, lots to get to. So thanks again, everyone. Really great to see you. It kind of makes my week. It's the end of the week, and it's a little cherry on top of the chocolate ganache cake that I get to see everybody who comes here every week to listen to me natter on. So welcome, welcome, welcome. I'll say a quick hi to everybody in the stream. David Alderman from a Frosty Chilton's. That sounds like a dessert. You go to a restaurant and they say, would you like a Frosty Chilton's today, sir? Some custard on the side. Steve Manton is here. Phil W. from the Wirral. Colin Perry, Peak District. Hi, Sue. And back in wet Newcastle upon Under-Lyme. Newcastle Under-Lyme, not to be confused with Newcastle upon Tyne, which always gets me. She wishes she was back in Tenerife. I'm sure you do. Dave Dawson, Dividend Dave Dawson is here from Staffordshire. Paul Bagworth in Kenilworth. John Morgan in Swindon. John Day in Nottingham. Arthur Atchison from a sunny but cold Belfast. And Peter Vince from Leatherhead. Welcome, Peter. Welcome to the stream. Tony Walton in Somerset. Aki Chak is here from Accrington. And Alan Stratford from the sunny Malverns. I have no idea where the sunny Malverns is. I just kind of thought you were going to be from Stratford upon Avon for some reason because your name's Stratford, but that wouldn't be true. AccuChap says, loving the expressions on the thumbnails. Yeah, I decided to get a little bit more creative with my thumbnails. I was a little bored with the standard one with the Financial Thing logo, which is here. But I decided to do something a little different because that's kind of my personality. So love it or hate it. Stephen Green from Southport. Robert Pates is here from Greece. I hope it's sunny in Crete. Paul Bagworth. Yes, Alan Lomas. Now Try TV. I don't know what that is, who you are, but welcome. Chimpo Naughty is here in Cambridge, home of the very prestigious Cambridge University, not to be outdone by Oxford, of course. Ken Wallace here from Sunny Island. And and welcome to everybody here. We're going to get right into it. Loan pad. I always do a loan pad check-in, as again it is high up on my list of peer-to-peer lending investments. 24.7 million pound loan book secured on a little bit more than 60 million pounds. Still seeing that loan to value at 41%. We went up a couple of loans additional this week. So last week 68 loans, this week 70. So LoanPad continuing to increase their loan book while keeping the average loan size at 363,000 pounds. And nothing has really changed with the loan situation. 8 extended loans, 1 defaulted loan. Everything is going as normal. I continue to receive my monthly interest. If you want to open up a LoanPad account, go to financialthing.com and click on the cashback link. You can get yourself a really nice cashback bonus for doing that. And oh yes, our sponsor, of course, today, Cufflink, which of course has been in the news this week. Some people having concerns. Email me. What's going on with Cufflink? Are they in trouble? Can you tell me your opinion? I will speak about that, but Cufflink is the sponsor of my YouTube channel. And if you want to sign up and get an account with them, again, go to join.cufflink.com/financial-thing. You can get yourself some cash back and it helps the channel. But I always speak unbiasedly. I will, again, have a video coming out with Narinda, maybe live tomorrow morning. I'm trying to get maybe, noon 30, 1 o'clock. It's going to be impromptu. Probably won't be announced, but it will be archived on the channel when I get him on here. I want to talk to him about the auditor's situation, which I already have done. Spoke to him on the phone this week. Growth Street paid back 100% of its investors and will enter liquidation. Really sad, about Growth Street. I just had such a good relationship with the previous CEO who reminded me of Harry Potter. And, I was really sad to hear about Growth Street, but businesses do fail. Unfortunately, Growth Street was one of them. I think it was hit particularly hard by COVID. It's just the way it is. So, but the beautiful thing is everybody has been repaid 100% as far as I can tell, and the news stories portray, which is a really great result for Growth Street. So hats off to them. Growth Street gets the applause for sure. Do we have an applause sound effect? Can we give Growth Street? There we go. Well done, Growth Street, for paying everybody back. Unfortunately, again, entering liquidation. That's a shame, but these things happen. Let's talk about what's going on in the news. We have a lot of stuff to get to this week, so we're going to do a little screen share here. Let's go ahead and pop that up there. And Blend Network gains approval for FCA direct authorization. Really good news for Blend. They've been trying to get this FCA authorization for a while. For anybody that doesn't know, I tell you what, it is a pain in the rump to get FCA authorization. It is expensive. You have to go through very nasty magnifying glass, and Blend has gotten that through, and one of the few companies to get FCA approval within the last couple of years, so hands off to them. Well done, Blend. Jan, CEO of Blend, is going to be coming on the live stream on, I think, May 13th, which is in a couple of weeks' time. So I'm going to have Jan on here live. We're going to talk about what's going on at Blend and also the state of the peer-to-peer industry. He's a smart guy. Usually has a lot of opinions about things. I like having him on here. So put down your calendars, May 13th, if you're interested in becoming a Blend investor. It's a great way to learn about the platform and really see the person that behind Blend. So May 13th, and then also for your calendars to June. Let me see. I can't remember. I think it's June the 3rd. We're going to have Peter Reed from, June 3rd. Peter Reed from Assets Exchange. Not to be confused with Assets Capital. It is, there were all workings of the same company there that are sister companies, but Peter is running that company. And we're going to have Peter Reed live here, 7:30 p.m. UK time on June the 3rd. So put that one in your calendars too. So again, increasing the guest amounts we have on the live stream. I hope you enjoy that because I think it gives really good insight into these companies, who's running them. I think it's super important to meet these CEOs and the people running these companies. So you can see it here live, which is super cool. I'm very excited about that. Yeah, so let's see. Blend Network gets authorized. Jan is very happy. He says he's thrilled to have been granted full direct authorization. The approval process required the FCA to conduct an extremely and exhausted and thorough due diligence on Blend Network, and it required Blend to disclose extensive information. So that's financial information, which is good. If you're an investor, you want to know that the FCA has looked over all of this. Now, not to say that FCA authorization is everything, because we've seen FCA authorized companies fail before, but it is another notch in Blend's belt, and I think Blend are doing some good things. I think they're a solid company run by solid ownership. So the FCA authorization is just the cherry on top of their business, which I am super happy to see. Let's see. Blend Network is in full growth mode and has been hitting multiple landmarks. The FCA authorization generates trust. So, yeah, we'll see what happens with them. Hopefully that loan flow will become increased. I think right now we're having a bit of a demand and supply issue with companies like Blend, possibly Propland, and Crowd Property, where there's just too much investor money and not enough loans. These loans are getting filled quickly, but that's obviously a testament to what these companies are doing, because they're not, small amounts of money. Blend, you're talking about £1,000 per loan. Same with Propland. So that's a testament to what these companies are doing, that investors are willing to put that much money into each individual loan. They obviously have trust and faith. I'm not currently a investor through Blend. That's more down to capital being used in other places at the moment, but Blend has always been on my radar, so I'm happy that they've gotten that taken care of, the FCA. So this news story: peer-to-peer investment demand outpaces market growth in Europe. Analysis by peer-to-peer platform RoboCash found that the number of search requests for peer-to-peer lending investments in March 2021 rose by 83% compared to August of 2020. Again, this comes from people just not knowing that they could put their money in the bank and receive any amounts of interest. So they're looking for places to get yield, to get interest, and peer-to-peer lending is a place you can do that. Obviously, if you invest through the correct companies, which is the challenge at the moment. We'll see with the companies that have failed. But Europe is a big market for peer-to-peer, and people are looking for that. Let's talk about Cufflink. We had the auditor's letter this week, the resignation of Ernst & Young. And so I did talk to Narinda yesterday. We had probably a 10-minute call about what happened. And I think this was an outcome of something that was planned before it was announced. And I did talk to Narinda. I remember on the live stream, if you want to watch that back, about the accounts being late. And that was all to do with Ernst & Young. I'm sure there was some administrative issues going on at Cufflink, but Ernst & Young said, hey, you need to have this, this, and this in place. And maybe Cufflink didn't have those things in place at the time. Now, Cufflink is a growing business. Ernst & Young is a company that tends to audit very large companies, and they're very stringent with their things that they have in place that these companies are supposed to meet. So the good thing is that Cufflink has taken those advisements on board and said, hey, we're going to make sure that we have those improvements in place, those things that we're supposed to have it done, things like having committees for each part of their business and having committee meetings. Now, personally, I feel, kind of bad for Cufflink because, first of all, I think meetings are a complete time suck, and having to add these meetings in for committees, in my opinion, is sometimes these companies don't want to do it because they're so busy working on other projects and growing their business that they don't necessarily want to be in meetings all the time. But Ernst & Young feels, it's a very old school system too of auditing, where you must have the stuffy meetings set up and we must have the records in this particular way and blah 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 blah. So you know, the news story came out in the Times that Cufflink had failed on certain parts, and yeah, obviously that rocks some of the confidence. But I also believe that when a company is very transparent and they address those issues quickly, and when they were told about them, Cufflink did address them. And Narinder told me about that, and he said he apologized to me for not saying anything about this because they knew it was happening, but they couldn't announce it until, or maybe not that they couldn't, they probably didn't want to announce it before the resignation letter came out. The biggest risk for a peer-to-peer company, too, if you are not very familiar, is having a run on the money. And that's a risk for any financial company. If you have people investing through your company and all of a sudden there's a run on it and everybody wants to pull out, that's one of the biggest risks the peer-to-peer companies have. And they have liquidity issues. They have trust and confidence issues from investors that get cold feet, want to pull out their money. So they have to be a little bit careful about what they announce and when they do it. But Narinder did assure me that everything is go, the business is solid. This is really just a blip on internal formulations that they needed to fix, and they are working on 100% doing that, and most of it they have fixed. So again, hopefully we'll have Narinder sort of express this himself in the next couple of days. If I don't get him live, then I'll put an archive video up of the chat that I am going to have with him, just so he can clarify what's going on. Yeah, and if you're a subscriber to the Peer-to-Peer Finance News, it's pretty much all outlaid there, what's going on and what Narinder's comments were. But there was an email that went out if you're an investor of Cufflink or signed up with them that you would have gotten, which was pretty explanatory. Shows the financial stability of the company, how their losses have decreased from 18-19 year to 2019-2020 quite considerably. They've reduced those losses, so they are working on becoming profitable, and that's just my opinion. You know, I think that the Cufflink has handled it well. We'll see what happens. Let's talk about Mintos. They have suspended a lending company from its platform. Mintos is a company that aggregates many of these different lending companies from throughout Europe. And time to time they're going to have lending companies that run into problems and they end up suspending. So eCash is one that they've suspended. Not really that interesting, but it was something that popped up. Let's see, how long are we running right now? Because I do want to keep this under an hour today too. If you have questions or comments, put them in the chat. I will go ahead and address those. We're running at 22 minutes. Yeah, I think we got time. Let's look at this. Blend we covered. Let's look at this. Peer-to-peer platforms remain on track for growth milestones. This was interesting. Nick Harding, founder of LendingWorks, said that he remains committed to the platform's £1 billion lending target. Yeah, I kind of really have mixed feelings at the moment about LendingWorks. I certainly won't be putting any more money in. I want to see just how the company's going to operate because of that pause, and the way that they handle things maybe wasn't the best way that they could have done it. Certainly didn't make me feel good about putting more cash in. So I'm just withdrawing capital and interest payments. Plus the interest rates, you know, it's okay, but for what they've been through during COVID, do I think it's the best place to put my money at the moment? Probably not. Let's see if they can get back on track, but they do still have this operational target of loaning out £1 billion by 2025. We'll see if that happens. Mike Bristow, chief executive of Crowd Property, said his platform is on the right path to meet £400 million lending milestone by 2024. That's a pretty big milestone for them. They're talking about a big amount of lending. They've gone over the £100 million lending mark, so they're obviously doing something right. Let's see, Zopa's default rate up to 40% below expectations. I was surprised about that. Especially with unsecured lending during COVID, I thought that their default rates were going to be pretty substantial, but they're saying default rates were 30 to 40% below expectations since COVID struck. He said during the crisis, the platform offered a quick service to customers, for example, setting up systems to answer phones within minutes. So obviously their customer service has been good. Let's see. Anything else interesting about that? I'm not really a big investor in Zopa. Again, I had a little bit of money in there, but was never particularly interested. Even when the rates were higher, I thought the risk to reward wasn't really particularly attractive. But they are the original founding father of the peer-to-peer lending world, and since 2008 have managed to go through the financial crash and survive. So they've survived this one too. That's a testament to them. And if they can keep those defaults low, we'll see what happens in the next 6 months. That's going to be really the litmus test of when all of this financial problems that are happening in the economy wash out after 6 months. Really, right now, we don't know what the potential real impact is due to COVID. So we'll see what happens with it. And one of my favorite stories of the week, now over 70% of savers are not confident to invest. Now, one thing I want to say is that this news story was a study that Wealthify did. Wealthify is kind of a robo investment advisor, and I would say it's a little biased because robo investment companies want people who are not confident to come and invest through them because they offer this really simple way of investing, but I don't necessarily think it's the best way. But they revealed that 1 in 6 people with £5,000 or more in savings but no investments had considered investing in the past 12 months, despite 58% having saved since the start of COVID-19 pandemic. Of those who are not confident about investing, over 1 in 3 said they do not understand how investing works. 22% find the language too confusing. 43% said they are happy with how their cash savings perform. That was what was really, really mind-blowing to me. They are happy with how their cash savings perform. I mean, how could you be happy with your cash savings? I mean, cash savings are just not doing anything right now. Lack of confidence was most evident amongst millennials, 84% and women, 74%. So 84% of millennials were not confident, 77% of women weren't confident, with both groups saying they do not understand the process. I mean, look, if you're a non-confident investor, the process is this: invest in simple things that have stood the test of time. Very simple. So let's look at Wealthify's website. I was interested. It's not somewhere I've invested. I did do a robo investment through another company just to test it, and the results were definitely far behind my index trackers. But this is interesting. So if you want to start a general, let's see what their products are. General investment account. Try it out. So what you can do is put your money in here, build a plan, and have them take care of everything for you. So fees on this are going to be a little bit higher than what you would pay through doing it yourself through Vanguard or Fidelity. And I'm going to show you what this looks like. So let's say we put in $5,000, and you can pick your, this is so annoying, £5,000. You can choose the original or ethical investments. I think that's kind of cool, but let's look at original, and then you can choose cautious, tentative, confident, ambitious, or adventurous. Me, I'm a more adventurous investor. It gives you these projections here. You want to change those, you can do that. And again, I'm not shilling this Wealthify, but I just want to show you what type of products they're going to put you in if you did sign up. So you can see here, right? you're looking at about 0.75% a year to use Wealthify robo investment. Doesn't sound like a heck of a lot, right? But I'm going to show you why this is important. This is the funds that they're going to put you in. So you put in your $5,000 as an aggressive investor. Oh, look, the Vanguard US Index, the LNG FTSE 100. That's legal in general. The HSB European Index, the Fidelity Index in Japan, Mid Cap Index, and then the HSBC American Index. So really, they're putting majority of your money into index trackers and then charging you a privilege to do that. Doesn't really make a lot of sense because you can put these portfolios together yourself. Let's say you went for a more balanced approach on the risk, confident that would be a 50% risk, 50% more cautious. Let's see what they put you in a confident, balanced investment. Royal London short-dated government bonds, Vanguard US Equity Index Tracker, global short-term bonds. So more bonds, they're balancing out with more bonds. And again, quite a lot of index trackers in there. Makes a lot of sense, but if you were to go super cautious, I'm imagining this is going to be nearly all bonds in here, which I've kind of a little strayed away from bonds. I just don't think you're going to get much of a return. Yeah, you can see all here. Bonds, then the Vanguard US Equity Index Tracker, which is the one that I've been telling people about on this channel for a long time. So you're getting the same thing. And then a few equity indexes here to balance it out. It's probably 80% bonds, 20%. Well, let's see, 56% bonds, 4% cash, 13.7% shares. Oh yeah, so add the 25.2%. Corporate bonds are generally more risky than government bonds, so but you're almost 80% in government bonds. It says it does what it says on the tin. So very interesting. Again, you're going to pay 0.75%. So if we look at Vanguard right here, you can pretty much build the same portfolio. I personally don't make it that complicated. I do the US Equity Index Tracker. It's 0.1% a year in fees plus Vanguard's 0.15% fee for the platform. So total of 0.25% in fees, and you can add Asia Pacific if you want to, or Japan if you want to throw some of that in there. If you want to put the FTSE in there, I personally don't do that, but yeah, so they're very, very low fee. You can even do a world tracker if you want to right here. This is quite heavy US based, 66.9%, and then Japan 8%, France, Germany, throw in some of that, doesn't include the UK. So if you want to do a world tracker, they're just so cheap though. I mean, 0.14% a year. And even Fidelity, same thing. You want to look at Fidelity, they have a US index fund tracker, which is very similar to the Vanguard one. You can see the fees here, 0.06% charge, and then a 0.08% transaction fee, so 0.14% in fees a year, plus Fidelity's platform fee, which is 0.35%. So you're going to play just a little bit under 0.5% on Fidelity, which is why I say go to Vanguard, because it's almost 0.25% a year cheaper. Doesn't sound like much, but it does add up if you have a pretty large portfolio. And then I really like Fidelity's Index World Tracker. I actually prefer it to the Vanguard one. Not really much in it, but again, the fees are just cheap, 0.12% with a 0.02% transaction cost. So again, 0.14%. You can see the portfolio again. You got some Asia, Japan, you got a little bit of UK in there. Big portion of the US, 64%. So if you want a bit of UK exposure, you can get that here, 5%. So if we look at a compound interest calculator, and this is what I really want to show you, how this 0.5% here and there really damages your portfolio. So £100,000 over 20 years. So you start with 100 grand, put in £300 a month, and look at the numbers here. hopefully you can see this. £614,000 will be your total. Sorry, £669,000 will be your total after 20 years, right? So that's based on an 8% annual return over 20 years. So if we knock that down to 7.5%, which is your 0.5% that you're losing to fees on companies like Wealthify, and by paying more than you need to in fees, you're going to see here, this is at 7.5% interest rate. You drop down to £612,000 in returns. So 669,000 to 612,000. Now that's a significant amount. You're talking about £50,000 in lost returns because of that 0.5% reduction in fees, or sorry, 0.5% increase in fees. And then if you start adding more money in there, let's say you put in 200,000, now you're talking about an even bigger amount. So at 7.5%, your expected return will be £1.058 million. At 8%, starting with 200 grand, you will be looking at 1.162 million in return. So you're talking about, you know, £110,000 in lost returns there. And the bigger your portfolio gets, the more damaging those little 0.5% fees become. So rather than using a company like Wealthify, hey, it's good if you are a completely novice investor and you have no idea what you're doing. You just want them to take care of it for you. Great. If you do a little bit of research and realize maybe you only need 1 or 2 index trackers, or you could just even do just a world tracker if you wanted 100% equity exposures to shares all throughout the world, developed world, you're going to save a lot of money in fees. So that's the way I personally would recommend people do it. It really doesn't take long to figure it out. You can just go to Vanguard, you can look at the funds that they have, go down to here is your US equity fund, very, very low cost fund, and it's done very well. Obviously, since COVID, March 2020 has really rocketed a lot. Or if you like prefer Fidelity, you can do it through Fidelity. There are other trading platforms you can buy these products through, but you're going to pay more in fees. You better just go direct to the source. And Fidelity's fund is going to be cheaper than if you were to buy Vanguard's funds through Fidelity. You're going to pay more that way. So best recommendation, just do it in the cheapest way you can and get those fees down as low as you can to really maximize your investment returns. That's what I would recommend. Let's see what else we got here. This is Blends. Let's see, hopefully you can see this. Let me not enlarge it. This is Blends Property Market Monitor for April 2020. And you know, the reason I pay attention to this because a company like Blend is focusing obviously on property peer-to-peer lending. So what happens in the property market directly affects them and their loans that they do. So if the property market in the UK is booming, Blend is going to do better. Average UK house prices grew by 5.7% year on year in March. That's good. That means that everything is moving forward. And what I expect to see happen as things open up and become more relaxed with COVID. Hopefully there isn't another lockdown. But I think you're going to see more and more growth in the UK housing market over the next couple of years, which is going to be good for Blend, who is lending on property. In March, average UK house prices grew to more than 5% year on year. Looking at the quarterly trends, we see that the UK Northwest remains the fastest growing area. This region saw an impressive 8.2% year on year growth in quarter 1 of 2021 and was the fastest growing region in 2020 with 5% growth last year, even despite the fact of this pandemic going on. And the Prime Minister is committed to revitalize the North, suggesting Boris Johnson plans to pour billions into the Midlands and the North. So they're very bullish on that region. Blend is, especially the Northwest and the Midlands. So again, Blend is very, very much tied into these target markets. When they look for opportunities, they do it in markets that they see growing. So very, very, very impressive. What's going on in the housing market. I was very surprised. I thought that things were going to be a lot worse. So it's been really interesting to see what's going on in the housing market. So here in the USA, the market is just absolutely booming. Even in the Orlando region where I'm currently at today, I think we had a 7 or 8% in first quarter rise, and there is just no inventory. People are moving out to the big cities into areas like Florida because it's very tax favorable. There's no state income tax in Florida. And of course, people want to get out of the big cities, so they're moving to more favorable places. And with that, supply and demand has gone crazy. There's demand for housing. Something goes on the market that's in the 300,000 US dollar range, and real estate agents are getting multiple offers, sometimes 10, 15 different offers on these houses. A lot of cash buyers from up north, places like Massachusetts, New York, are selling their homes up there for a much greater value than the housing costs are in the south of the USA. And then they're paying over the market value. So for properties being sold at 300,000 US dollars, they're coming in and then paying 10%, 15% more than the asking price just to get into the home. So really crazy. And we could see situations like that happening in the UK too, as people want to get out of the cities like London, Manchester. They go out into the suburbs. The pricing is cheaper in some places, and they don't want to necessarily be in those cities because we've seen what happens to COVID. We've seen what happened because of COVID, people being in these enclosed environments where the disease was just spreading, this infectious virus, and they're looking to get out. So pretty cool. Pretty cool what's happening in the housing market. Let's see, what else can we talk about? I'm going to check your comments. We've been going for a little while. I've kind of been racing through 41 minutes and then massive attempt to get under an hour today. Please hit that thumbs up if you can. Subscribe. I would greatly appreciate it. We are on that hill to get back to 1,000 subscribers after the previous YouTube channel ban. We have about 55 people on the stream. Thank you to everybody for tuning in. If you have anything you want me to discuss, put it in the chat. Thanks again to Cufflink for sponsoring this live stream. And again, if you want to get some Cufflink cashback, go to join.cufflink.com/financial-thing. Let's have a look and see what's going on in the comments today. As always, I definitely appreciate you keeping the comments PG-13, because we do have some younger people that watch this and targeted. It's Paul New. Are you late, Paul? What's going on? Why are you late today, Paul? Mark Burnett is in Scotland. Oh, sunny Scotland. Welcome, Mark. Thanks for joining the stream. Paul New is late. Yeah, lionfish hunting from the steamy Grand Cayman. Tell you what, that's not a bad place to be. I think that's Debbie from Mixed Media Arts. Chimpo Naughty says, that's Darren. I think Cufflink will actually come through this whole thing looking stronger and more impressive to everyone. Yeah, I mean, if they do things the right way, they haven't ignored it. They haven't tried to sweep it under the rug, and they've taken care of things as best they can. Is the 2019-2020 Cufflink annual report due in June? Honestly, I don't know. I will ask Narinder when I talk to him tomorrow. Robert, will we be able to access the cryptocurrency video in the near future? It appears to be missing. Yes, you can actually. It is up. I have put it back up. Let me find the... Let me have a look and see if I can put that here in the link. Where is it? Where are we? Where is the YouTube channel? But I did repost the Coinbase video. I just have to find it. If you go to the financial, where are you, Coinbase video? I know you're on here. You have to go onto the YouTube channel, click videos, and here we go, Coinbase tutorial. I will put it in the chat for you, but I'm going to put the other here we go. It's in the, I just put it in the chat if you want to watch that. So yes, it is in the video. I'll be making more cryptocurrency videos. As you know, I'm a fan. So let's see here. So Paul says, how long can LoanPack continue to do that? I think I saw it. Oh, here we go. Alan said, interested that over 14% of invested funds on LoanPad are not assigned to loans, but they still pay interest on those funds. I mean, remember, so the interest rate that they're paying on those uninvested funds is relatively, it's not high. It's not they're paying 6, 7, or 8%. But they do, you know, as the loan book grows, you'll see that number really fluctuate. And I've seen mine fluctuate from just a couple of percent up to 10 to 14. I think they're obviously, ideally, they would like to have zero cash drag because it costs them money, but they do factor that into what they have to pay out. So they are, you know, I'm going to ask Louis about that. What do they do to try to counterbalance that? I would imagine if it would to become a problem, they would just shut down taking on new investors because they don't want to get to a point where they have too much demand, not enough supply, and then they have all this cash sitting idly on the platform they have to pay interest on. Either that or they'll stop paying interest on idle funds. So it's obviously not a problem at the moment. Let's see. Hi, Annabelle, Nyrin, welcome to the stream. Robert Pace, there was a peer-to-peer summit on Zoom today. Did you or anyone else see any of that? You know, I did not. I did not see the email. I was late to it, but that was on, I think, Peer-to-Peer Finance News' website, so hopefully they'll archive. Me Too says, investments, how to get a small fortune, start with a large one. Yeah, that's true. Stuart Hale says, withdrawing out of lending works, won't be investing, not happy how they treat investors over interest rates, and taking back past interest via change rates. Yes, in their defense, I will say that it's better to do that than to have the platform go. So, you know, Assets Capital did it also with their 0.9% annual fee that they introduced. Robert says, if people are happy with cash savings, they just don't understand it. Yes, Paul said, Lawrence, don't forget cash savings are FSCS protected. Yeah, but I mean, okay, it's a fair argument, Paul, but if you're holding too much in cash, you're actually losing money to inflation, and it does not make any sense to do that. So a lot of people are just afraid. They don't want to put their money into investments, but you and I know in the long term, you put cash away and you invest every month. When you're 20, 30 years down the line, you're going to be in a much better position than if you were sitting with cash in the bank getting your 0.4%, maybe a little bit more, probably going to be a little bit less. I just got a email from Ford Money this week saying they're dropping their interest rate again. I don't want my, you know, the least amount of money you have in the bank now, aside of having an emergency fund of probably 6 months of your living expenses, is just not necessary. I mean, you're just going to lose money to inflation. Mark says, we need education at school to learn about investing. Absolutely. It's one of the biggest problems. We don't get taught about money, and we don't get taught about relationships. Those are the two problems we have in our society. Is the divorce rate is sky high, and people don't know how to invest when they're young. Wealthify do actively manage robo portfolios, and they make changes and adjustments. I mean, but when you're investing in index trackers, I could see if they're managed funds. But again, managed funds are the worst. What adjustments do you need to make? You know, I mean, you lose money in stocks and investments when you sell at the wrong time. So I don't know really how they're adjusting it. Maybe percentages here and there, but yeah, I get it. Cufflink secondary market looking good today, only 4 loans on there. So when all this news came out, Cufflink secondary market did have more activity. People were trying to sell loans to get out, but it was only a small amount. Darren tried Wealthify starting February 2020. Yeah, it performed well. Good for beginners. Absolutely agree. If you really don't have any any investing knowledge, yeah, it's a great starting point. You know, and then the other thing you do is start with a company like Wealthify, and then once you become more experienced and figure it out on your own, you can just move your money out. Ethereum hit all-time high today. Yeah, Ethereum's been on a tear. I started getting into more Ethereum about a couple of months ago. I thought this was sort of the way it was going to go, but Ethereum is a coin that, again, I plan on holding and then bouncing out of into longer-term Bitcoin. There's a lot of questions about what happens when Ethereum 2.0 comes out. Is that going to make the price really fluctuate? Is the Ethereum network going to be better? Ethereum is its own worst enemy at the moment because of the price. The more expensive Ethereum gets, the more clogged the network gets through transactions, and then the higher the fees are for Ethereum. Right now the fees are very expensive to use Ethereum, the gas fees. John says, crypto is like watching a yo-yo at the moment. I know. It's fun. I took a little bit about crypto. People have said to me, what's my favorite cryptocurrency at the moment? I think about 80% of what I have in cryptocurrency is between Bitcoin and Ethereum. And then the other 20% is sort of dabbling in those alternative coins, also known as shit coins. Sometimes they get known as that. Alternative coins are really should be looked at as startup companies. They're very interesting. They're very interesting in what they do, but they're very risky too in some cases. So you have to kind of look at what the coins are actually used for. What is their use base? And try to look at it like a startup company. Is that company going to flourish in the future? Or are they going to struggle? So if we look at what's going on in the market cap right now, we've got obviously Bitcoin is the biggest. We got a price of $52,828. I mean, this is amazing. If you think about back in March of 2020, we were at around 3,000 US. It's a big jump, a big jump. You can see this is interesting. The market cap is just a little bit under 1 trillion US dollars now. This is the volume right here that is bought and sold in one day, and we're talking about one day, 47.5 billion dollars in Bitcoin transactions. You can see the circulating supply here of getting close to 19 million Bitcoin. Then Ethereum. So these are my top 2 holdings at the moment. This is an interesting coin. I think Solana. There's been some talk about them really gaining some traction. I think I don't actually personally own any of these, but it's something that I've really been looking into because it's just so cheap. This is really what Ethereum is competing against right now. Ethereum is very expensive for transactions, but Solana, you're talking about just very, very little cost to using it. And they claim that they can do 50,000 transactions a second, which Ethereum cannot do. I think Ethereum is maybe 50 transactions a second, so this is a very, very fast, very, very fast. And some of the other coins, by the way, are running on Solana, like Terra, the Graph, and it's very interesting. So, but again, that's not really a coin that I do invest in. One of the other coins I like is Binance. I think Binance, which is a huge trading platform. If we look at, so Binance has a coin, it's BNB. If you look at Binance, this is the top cryptocurrency exchanges. This is where people buy and sell things like Bitcoin, Ethereum. And you can see this is the platform I use, Coinbase, right? Coinbase Pro, $3.8 billion of volume in one day. But look at Binance. This is not even the US Binance. This is the regular Binance, 37 billion. And I have seen that go much higher. I mean, I've seen 50 plus billion US dollars of transactions in one 24-hour period. I mean, 10 times more than Coinbase. You can see the next one is Hubi. But so every time that you do a transaction on Binance, where you buy or sell cryptocurrency, you can pay for your fees using the Binance coin, which is BNB. And you get a 25% discount for using that coin. And so obviously everybody on Binance is using the Binance coins to make transaction. The Binance coin is also a limited supply coin. What they do is burn coins, and they'll eventually cap it to 100 million coins, which I think will make the price of Binance increase. This is probably not going to be a coin that you're going to get 10x out of, but it's a very solid big cap growth coin that if I'd have known about it early on when I was looking at coins and my knowledge was greater, I definitely would have gone heavier into Binance. So I do own a little bit of Binance. That's probably, if I was going to redo my portfolio today, it would probably be Bitcoin, Ethereum, Binance. I also like the graph. I think that's a very interesting project. It's about APIs on the blockchain, APIs, data grabs. And then there's a couple of other coins like Chainlink I think is very interesting. But again, these are much higher risk projects. Even I would say Ethereum is a much higher risk coin than Bitcoin. Bitcoin, again, store of value, store of assets like digital gold. All the other companies, all these other coins, definitely riskier, use-based coins, proof of stake coins, rather than mine coins. Like, remember, Bitcoin is a mine coin, so there's a limited supply. Ethereum is also a mine coin. The miners are solving mathematical equations and being rewarded with Ethereum and Bitcoin to do that. But proof of stake is something completely different. Sorry, proof of work, which is what Ethereum 2.0 is going to be. It's going to be moving away from a mine coin to proof of work coin, which means people will stake their own holdings in Ethereum for the network to be used instead of miners, digging this stuff out of the digital ground. So things could change with that. Again, higher risk coins. Some of them I'm sure are just going to not do well. Some of these small coins, like I always look at the big caps first. We're talking, if you want to look at this, you can go to coinmarketcap.com, see which are the biggest coins right now. This Binance coin is about 89 billion US dollars, which of course is a little bit under 10% of what Bitcoin's market cap is. But I wouldn't be surprised if you're going to see this number really start to catch up towards Bitcoin. And right now there's 153 million coins on the marketplace. There will only be 100 million eventually, so that's going to cause a price increase to them, I believe. You can see Solana here, which is the coin I was speaking about, at 11 billion market cap. So interesting. And then if you look towards these smaller coins down here, these are going to be the riskier ones. It's only a few of them that I actually own. With the, what you're doing with these small coins is hoping for a big spike in price and then eventually getting out of them. I think PancakeSwap is an interesting one. I would probably look towards them versus Uniswap. The PancakeSwap is a place you can take your existing coins that are on the Ethereum network and then trade them into other coins for very low fees. So interesting projects, but again, very could be pretty risky. REN is a coin that I own a little bit of, and Decentraland, where is that? It's pretty small cap coin. But I would definitely focus on those three big cap coins at the moment for definitely long term. We're talking about Bitcoin 10 plus years. Ethereum, I don't know. I may be out of Ethereum next year once this bull cycle run is over. Really not certain about the longevity of Ethereum. As you know, it's a double-edged sword, because if the price continues to go up, it means the gas fees of the transactional fees on Ethereum are going to be higher, and then, you know, companies will start to migrate to other companies to use their payment system. So places like Solana will get benefit from that. So we shall see. One other thing I wanted to show you was a market update here for LendInvest too. Totally forgot to do that. They put up 15 investments in March, which is huge, £6.11 million. Wow, I mean, they continue just to keep on growing and taking on more loans. Average offered return 5.55%. It's not terrible. It's pretty competitive considering what's going on in the rates. Obviously going to be lower than places like Crowd Property and Blend, but I think the risk is lower with LendInvest. 58% average loan to value, so you're talking again lower loan to values, lower risk as long as they are valued correctly. Here you can see the graphical breakdowns of where they're exposed on these loans and investments in March. London 1.55 million, east of England 3.96. So they're going over towards the east. So on schedule, this is the status of their live investments. 86% on schedule, 1% in arrears, 10% out of term. So that's the underlying loan has not been paid on schedule. There has been an unauthorized extension, or the loan terms have been breached. So this is a number that we want to pay attention to, because we want to see how healthy LendInvest loan book is. And then 3% are in enforcement, which is in recovery. So yeah, I mean, if you're looking for a place to put money where you get a decent return and you're going to have a good amount of new investments coming in as a loan flow, which has been one of the problems of the smaller peer-to-peer lending companies. You know, LendInvest is a pretty big company in the grand scheme of things, and they really are growing. So a good amount of loan flow. I set mine up on an auto invest. A relatively small investor through LendInvest. Probably would have more money if I hadn't have stuck too much cash into places like MoneyThing at the beginning, and of course paying the price for that now. So they seem to be doing well. And there was another story. I wanted to just show you this on my email. This was a update on the House Crowd on their developments. So there was a vote. Investors in each development project. This is remember, House Crowd has two types of investments. Talk about the SPV owned houses that have shares on one type of investment, and then the developments that House Crowd was doing themselves. But they had a vote on the development side. Investors in each of the development projects were asked to vote between option 1 and option 2. The outcome of the vote was overwhelmingly supportive of option 1, which involved investors agreeing for the House Crowd to relegate its security ranking from first to second in favor of an external lender. So again, option 1, each development company acting by its director, Fraser Fernhead, in all cases obtains external funding to support the completion of the developments. Or this was option 2, House Crowd enforces its first ranking security on behalf of investors over each development company and appoints a receiver and an administrator to sell the uncompleted projects in a partially completed state. Not really either one of those options seems particularly appealing. I mean, on the one hand, you got option 1 where you're letting the director take over, go get funding to complete these developments. I don't know. I mean, obviously things haven't been run correctly in the first place, so that wasn't looking too good. I never liked the idea of letting the the first charge go and then letting a borrower come in, sorry, an investor come in and take over that first charge. It just, I don't know how this is going to play out. I mean, best case scenario, the developments get finished and people get repaid some portion of their capital. Worst case scenario, it gets cocked up even further and the developments don't get completed, and then they get taken over by the administrator and sold as incomplete anyways, which would be pretty detrimental. I thought that was interesting. The other thing too, I got this email from Bondster, which is a European platform. They have a new loan originator, Autofino, that provides car loans in the form of financial leasing. Sound familiar to another company that went under? Buy-to-let cars, something. Now, some of these European platforms offer these buyback guarantees, and it's secured 1 to 5 years. By a buyback guarantee in a car, the investment will bring you an annual return of 10 to 13%. If you're in Europe and you're looking at these types of investments, just know this. Those buyback guarantees are worth nothing if that company goes out of business. So they seem good in theory until you factor in the fact that these peer-to-peer lending companies can go out of business, and then those buyback guarantees become absolutely worthless. Also, loans on cars, depreciating asset every year. The car's becoming less and less valuable, plus somebody could nick the car, take off with it. Then there's just a personal guarantee, which is worth probably not much more than a bucket of poo. And that could really be actually quite a risky investment. So personally, not really into car loans. Seems like a good idea on paper, but if you think about a asset that can be easily stolen or hidden or crashed, of course there's probably insurance, but again, we don't know what the goings on are behind these loans and these companies. So buyer beware of anything to do with car loans. Don't forget, if you want to join the Financial Thing, oh, that's not it. There's the group, Financial Thing group on Facebook. You can Google it. Financial Thing Facebook. Go on Facebook, search for Financial Thing. Come join us. We do chat about all things peer-to-peer lending and investing on there. So go do that. Again, subscribe if you can. I really much appreciate that. John says, I've put a small amount into etoro to copy some long-term traders with good trading records over a few years. Is there anything to watch out for? Yeah, one thing, a market crash. Because if you get caught trading in a market crash or a correction, you're going to... Those traders got pretty burned during that last crash in March. What you can do, and what I recommend if you're buying individual stocks and shares, make sure you put stop limits on your trades. So I think anywhere 5-6% is a good amount. So if you buy £100 a share, you want to put a stop limit at maybe £96. Oh, did I say that right? 5%? No. Yeah, so 5 or 6% would be £96. No, £94. And then that way, if the market does take a really big dump and you're not around to make adjustments, you're out having your pub lunch or something like that, then that loss will get triggered. I also think it's good to take profits too, to set those sell orders maybe 5 to 6, 7% higher than what you buy for. That's a conservative trading way to do it. But again, I'm not really a big trader, so just be careful. Be careful. Gambling, yeah. Alan said, it looks like the topic has moved from investing to gambling. See y'all next week. Yeah, well, if you think that cryptocurrency is gambling, then you got some research to do. Some of the coins are a gamble. Bitcoin, I don't think, is a gamble. My personal opinion. Yeah, I think cash is a gamble. I like that. I like that statement there, Dave. You know, cash is 2% you're losing every year to inflation. That's a huge gamble. Who would want that? Dan Barber is here. Hi, everyone. Sorry I'm a bit late. Yeah, you're pretty late, Dan, but that's okay. We still like to have you here. Welcome to the stream. Let's see, what else? Any other comments? Just getting warmed up after the first hour. The pub shut at 8 now. Yeah, but that won't always happen. David says, I'm a big fan of Land Invest. Quality outfit. Of course, we will see what happens when the property market takes a hit at some point. But there are other firms who will struggle before Land Invest. I totally agree, and the reason is they are just so well capitalized. They got a big credit line, I think from JP Morgan. And Land Invest is just a part of a much bigger company that funds them. And it's kind of like Octopus Choice was. Octopus Choice was just this small part of the Octopus Group, so the funding was coming from the Octopus Group. And unfortunately, Octopus Choice did decide to stop peer-to-peer lending. Maybe it wasn't profitable for them. Maybe it was an excuse for them to get out and shut the business down. But I think Land Invest is going to be positioned quite well, especially when things open up after the COVID-19 shutdowns. So we will see. Somebody in the Facebook group talked about staking. They wanted to know about this pancake swap staking. Yeah, I mean, staking's an interesting topic. It's probably too much to talk about here tonight, and I'll talk about it next week on Thursday. I'm going to do a little bit more research into pancake swap and how the staking works. The biggest downside of staking is that sometimes your coins get locked. They get locked up and you can't take them out. It's okay if you're a long-term holder. So for me, I plan on leaving my Bitcoin alone for the next 10 years. So there would be a use case for staking things like Bitcoin. Problem is you have to do it through companies like BlockFi, which the problem there is if BlockFi for some reason fails, your coins are with BlockFi or with the staking companies, and there is a little bit of uneasiness that sits in my stomach about that. Coinbase I'm not too worried about because they insure coins. They insure their cryptocurrency, but other companies do not. I know BlockFi does have an arrangement of some kind of insurance or situation with another third-party company, but again, that would be the reason I would sort of shy away from staking through places like BlockFi. But I think there is an argument for doing staking if you're holding on long-term. You can get 5-6% out of staking your Ethereum. I mean, that's some good yield. So, but we'll talk about that. Dave says some of us might be dead in 10 years. Well, hopefully not. I would hope you will all be around for a while. Anyway, I think we're going to wrap it up. That's it for this week. We'll be going way too long again. Thank you to everybody. Again, hit that thumbs up if you haven't already and subscribe to the channel. We'll be back next Thursday. Don't forget, May the 13th, we'll have Jan Marciano from Blend Network live here on the stream. Possible live streaming tomorrow with Narinda. Don't know 100%, but definitely a video coming with him. Will be archived to the channel. And then in June 3rd, we will have Peter Reed from Assets Exchange here live. So come join us. Welcome to everybody that's new. And thank you for joining us. And have a great weekend. And we'll catch you next time. Take care. Bye.